Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings, and today we're looking at X.T.I, Aerospace Incorporated's latest report, and let's just say some folks are getting a nice little bonus extension on their stock options. Before we dive in, if you dig getting the real story behind company moves without all the corporate jargon, make sure you hit that subscribe button and join our Discord community. It is linked down in the description where we chat about these filings even more. So what are we looking at here? This is a Form 8K filing. Think of it as a company-S way of quickly telling the public when something important happens that could signal a big shift or affect investors. It could be major news like a new executive joining, a big deal being made, or an X.T.I Aerospace case changes to how certain people can exercise their stock options. Our company today is X.T.I Aerospace Incorporated, a Nevada-based company involved in aerospace. They're publicly traded on the Nasdaq Capital Market under the ticker symbol XTI. The big news in this filing falls under item 5.02, which covers changes in directors or top officers and executive pay. What happened here is that on the 9th of October 2025, the board of directors at XTI Aerospace Incorporated approved an extension for some very important people. This is all about stock options. Now, stock options are basically a right given to employees to buy company stock at a certain price in the future. When someone leaves a company, they usually have a limited time, often just 90 days, to exercise those options before they expire. If the stock price has gone up, they can make a nice profit, but if they leave and can't get those options in time, they miss out. What X.T.I Aerospace Incorporated did here is extend that time limit for their Chief Executive Officer, Scott Pomeroy, and the CEO of their RTLS division, Soumya Das. Instead of just 90 days after they leave the company, they can now hold onto their vested options until the actual expiration date of those options. This is a pretty significant perk being offered as a reward for their service. Now, there are some conditions. This extended window only applies if the person leaves for reasons other than death or disability, and not if they are fired for cause. And of course, they have to agree to this extension in writing. They also extended this same benefit to the company's independent directors, which is a common practice to retain and incentivize board members. For them, this essentially means their options don't expire just because their term on the board ends. Let us look at some of the actual stock options that are affected. We see a few grants. For Scott Pomeroy, there are options to buy 2537 shares and 8714 shares, both at an exercise price of $118.25 per S-share, granted back on the 12th of June 2024 and set to expire on the 12th of June 2034. That is a 10-year window on those. Then there is a much larger chunk for Mr. Pomeroy 2621000 options at a much lower price of $2 per S-share. These were granted more recently on the 4th of September 2025 and expire on the 4th of September 2035, giving a 10-year life again. These lower priced options were mostly not vested right away, with 1/3 vesting immediately and the rest vesting over 2 years. For Soumya Das, we see similar grants. 2537 options at $118.25 expiring in 2034, and 1364 options also at $118.25 expiring in 2034. And then there are 78,000 options for Mr. Das at the lower $2 price, granted in September 2025 and expiring in 2035, with a similar vesting schedule to Mr. Pomeroy S lower priced options. And just to clarify the vesting for those June 2024 grants, options vest 1/3 each year over 3 years. For the September 2025 grants, 1/3 vested right away, and the rest will vest in smaller amounts every 3 months for 2 years. This means these top executives and the independent directors have a strong incentive to stay with the company because their ability to potentially profit from these stock options is now protected for a much longer period, even if they decide to leave. The rest of this filing is pretty standard stuff. It includes the cover page interactive data file, which is basically machine-readable information about the report itself. And finally, we have the authorized signature Scott Pomeroy, the Chief Executive Officer, signed off on this report on the 16th of October 2025, confirming these changes were made. Now let us put on our investor hat and look at what this all means. On the surface, granting extended option terms is a way to retain key talent. For folks like Scott Pomeroy and Soumya Das, this is a pretty sweet deal they're getting. It means if the company performs well and the stock price jumps significantly before these options expire, they stand to make a substantial amount of money. This can be a powerful motivator, aligning their financial future with the success of X.T.I Aerospace Incorporated. However, we need to consider the context an 8K filing like this, especially one that deals with executive compensation and options, is an important signal. When a company extends these benefits, it can be seen as a sign of confidence from the board in the company's long-term prospects. They believe the stock price will continue to grow, making these options valuable. On the flip side, some might interpret it as the company needing to retain its top talent at all costs. We don't have financial tables in this particular filing to analyze revenue or profits. However, the focus on these stock options suggests that the company is heavily reliant on its leadership to drive future growth and is willing to invest in keeping them motivated. Are there any risks here? Well, the primary risk for the company is if the stock price doesn't perform as expected. If the options remain underwater, meaning the exercise price is higher than the market price, then the extension becomes less valuable for the executives, and the company has essentially given away potential future equity for little gain. For current shareholders, this means potentially more shares being issued in the future, which could dilute existing ownership if not managed carefully. Ultimately, this filing tells us that X.T.I Aerospace Incorporated is taking steps to keep its key leaders in place, signaling a belief in its future growth trajectory. It's a move that can benefit both the executives and, if the company thrives, the shareholders too through continued innovation and strong leadership. Alright, that is our breakdown of X.T.I Aerospace Incorporated's latest filing. What is your take on these option extensions and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.